back to JPX Energy Market Weekly Updates. After last week's decline, oil prices have started to pick up again on the back of hopes for Chinese demand rebounding soon, and Russian-Ukraine war enter into a critical phase. Intermonth spread of the future benchmark rallied along with the absolute price. Spread of JPX Dubai crude contract for June and August delivery was last traded at 2,290 yen, or equally $2.9 per barrel. The overall market structure of the three future benchmarks, JPX Dubai, IC Brent, and NYMEX WTI has turned into a less steep backwardation structure. In North Sea physical crude market, the steep premiums of dated Brent to future prices seen over the past several weeks have turned into discounts as release of strategic stock provided much-needed supply buffer. While prices remain about $80 per barrel for crude delivery through the next 2 years, indicating a tighter crude market in the long term because of insufficient investments. In the coming month, risk of EU-wide ban on Russian oil imports still remain in focus. The sanctions package allow for traders with the Russian-listed entities under pre-existing contracts in place prior to March the 16th, but only until May the 15th, creating further anxiety among commodity traders over their existing supply contracts with Russia. Any such move is expected to cause further disruptions to global oil flows and lead Russian oil export falling further. The International Energy Agency said in its monthly oil market report that total Russian oil exported by sea fell around 330,000 barrels per day in March, with crude and products seeing divergent trends. Crude shipments rose 440,000 barrels per day to 3.4 million barrels per day, while products fell around 780,000 barrels per day to 2.3 million barrels per day. The IEA projecting a larger loss of around 1.5 million barrels per day by the end of April, and existing sanctions deter further buying or should ban on Russian oil export. Losses could stretch close to 300 million barrels per day from May onwards. The biggest product export losses so far has been in fuel oil and feedstock categories, which fell in March by 500,000 barrels per day in total to 810,000 barrels per day, and represent 2/3 of the decline in product export. The fall in heavy components has supported value of medium to heavy soil crude compared to light crude grades. The dearth of these crude grades, previously from Iran, Venezuela, and most recently Russia, has tightened global heavy and soil feedstock supply. In addition to the quality matters, the spread between JPX Dubai and IC Brent narrowed so far in April because strong buying interest from Asian refineries and a previous wider Brent and Dubai spread that limited west to east arbitrage opportunities pushed the value of Middle East spot prices relatively higher. Well, it looks like the bullish crude movements that stem from the supply side are now more or less priced in, while the demand side still remains a concern. China has published plans last Friday to resume production in Shanghai after weeks of COVID-19 lockdown might help alleviate recent market concerns, while global demand is likely to see market recovery in the coming month with the falling COVID-19 cases. But for the longer term, as Russia and Ukraine war grinds on, resulting supply disruptions in Russia and Ukraine will continue to weigh heavily in key commodity markets for energy, metals, fertilizers, and food. Prolonged supply deficits and price volatility across all these goods will threaten trade volumes as well as global economic growth. The resulting slowdown in economic activity and high prices will cap increases in oil demand for the rest of the year. In the latest oil market report, the IEA, OPEC, and EIA have revised down the oil demand for this year by 260, 410, and 810,000 barrels per day, respectively. Weaker demand growth and steady output increases from the Middle East countries, along with the United States and other countries outside the OPEC Plus alliance, should help the oil market well supplied. In the third quarter of this year, market could probably see the first restocking of oil products in 2 years, provided the refinery runs ramp up between April and August seasonally, according to IEA's analysis. Okay, that's all for this week. For more information on the energy market, please stay tuned for JPX Energy Market Weekly Updates.